Nic Chahine, good morning, my friend, from Create Income with
Good,
Option
good,
Spreads on Market Fi. What's up, Nick?
good morning. Good morning. What's up? Not the market.
Not the market, not the market. All right, we're talking oil, obviously, talking Russia, talking Fed meeting. There's so much going on. I know you're a macro guy first, then you dive into plays with your credit spreads. What are your thoughts on this market?
I'm going to say something that I've been saying for a long, long time. Nothing major has changed as far as fundamentals concerned. The variables are still the same. We just had a few new headline events. So we're trading headlines, basically. We're reacting to headlines. Just perfect example this morning, we dropped, 33 points from just a couple of hours ago on the Russia headline. It's fear. We don't know the move in Russia. What's it going to ultimately affect? Nobody's that smart. We found that out in '08 that we thought we knew all the repercussions of all the bad loans are out there, but we didn't know. So that's what's causing all the sentiment change. So we're basically changing sentiment and trading that. The fundamentals are the same. Europe needs help. We don't. And we cut QE and we're going to raise rates, and Europe is supposed to be getting a QE. But this morning's move, I think, is more on some comments that were made by a hawkish German um, government person talking against the QE there, because we priced in the QE, we as in the markets, for early the first quarter of 2015, and his comments were hawkish against that. So that's why we dropped all these points. And piling on top of it, the Russia move, it doesn't take much to drop us, and 30 points plus is pretty massive move.
What are your thoughts here on this whole Russian ruble collapse? Are you looking at you're not a big currency trader, but do you watch this stuff to
I, I watch it. I don't trade it, and I think I said the oil move is political, and I thought it was a war between OPEC and the West, basically Obama and Saudi Arabia, and that Russia is just the what do you call it, collateral damage. But there's another theory out there that it's behind the scene deal against Russia because sanctions weren't working very well. And look at how well this thing is working. If they really planned it that way, that's pretty incredible that they were able to pull it off. I think it's more the other, because people were saying OPEC is insignificant, OPEC is done for. OPEC has pretty much said, really? Let me show you. you know, they pretty much clobbered everybody that doesn't pump oil like they do. Brazil, Canada, basically, anybody that needs oil $60, $70 plus to actually survive is toast.
All right, now,
well,
go ahead.
this has been spilling into now the entire market because oil, the market had been ignoring the oil collapse here pretty much the entire time until last week when they started correlating, the equities started going down with the oil here. And now we're seeing this move where the oil goes down and the equities go down. Do you see that trend continuing? Do you think this, if oil goes down to 45, $40, where some people are predicting it to go, do we fall 10% on the S&P futures?
I don't know if it's going to be one for one. I mean, remember the Ebola? Every person that came out with Ebola, then we dropped considerably, and
Yeah.
then we started divesting a little bit from it. Ultimately, it is a good thing to have low oil. It depends on what the reason why oil is dropping. Is it because China now is going to shrink? Or has demand really got cut in half in a couple of months? I don't know that it did. I think the drop is more political. So until the market realizes otherwise or finds out otherwise, then we're going to have to taper off. Like yesterday, Dennis Gartman was saying oil in the 30s for sure. He was so emphatic about it.
Wow.
And he knows his stuff. I usually don't give him a lot of credit, but I've never heard him say anything so emphatically. And he goes, oil is going to the 30s. So we'll find out soon enough, I
We're gonna
guess.
have Dennis Gartman on here in 20 minutes, so we can ask him about that. So he's following you up there, Nick.
Uh-oh.
so
Uh,
uh, let's talk some specific stocks that we know you like to trade, and we haven't talked about Priceline for a while here, and it had a pretty good down move there yesterday with the overall market. It fell $30, and it's falling here again today. I know you say sometimes 20, 30 points. That's just a normal day for Priceline here, but
Yeah.
it's starting to show some weakness overall here as well.
Yep. Yesterday, I had the conversation about Priceline. I have a couple of friends that were looking to catch the falling knife of Priceline on the red candle that happened yesterday. I said it's too early. I feel like it's got another big red candle coming, and then I'll start looking maybe at doing some credit put spreads to go along it gently. And by that, I mean I'll probably be in the 900s to take a gamble. Not it's going to go to the 900. My credit put spread will be in the 900s to take a small premium, and the VIX is pretty elevated, and that helps the premiums to be elevated because everybody's so nervous. So I get the chance to take in the same amount of premium, only a
Mm.
lot further away from trouble, as opposed to get greedy and get closer to trouble with
So
higher
you
premium.
so you like it when this volatility comes into the market because you can actually because you always think when volatility increases you take more risk, but actually the way you're playing it, you can actually take less risk because you can rate further out.
I write further out. For a spreader like me, a credit spreader, I want nothing to happen. So volatility really is against me.
Still not
But
me.
but the worst thing for credit spreads are headlines, because you can do all the homework you want and you can apply all the discipline you want. You get a headline, boom, you're out, because of the headline and nothing more than a headline, whether it's reality or not. Just the headline will take you out if you're too close to the line. So yeah, I've been doing more debit spreads than credit spreads than I've ever done, not ever done in recent history. So I do a credit spread out in time, and I hedge it with a closer to prices and shorter in time debit spread, and I get the profit on that. I did that with Tesla a few times, and that works out well. Kind of like scalping with other people's money. I do the credit spread to finance some debit spreads that are closer to price and smaller in size. So I like those kind of trades these days. It's just there are a few gambles to take, even on falling oil. Like I'm not an oil guy. Maybe Dennis can speak to this one after me. But if little oil companies are going to blow up, I can imagine that the big guys are going to come in and sweep and buy stuff for cheap.
Mm.
So the big guys are going to benefit long term. And I would look for companies that were green on red days, like yesterday. Exxon was green. Yes, it was less green at the close, but I can't help but these bigger companies are going to come out better for it if the price is temporary and political.
Nic, now you run. I'm gonna drop the link in the chat. You run the Create Income with Option Spreads portfolio newsletter, and you have a ton of traders in there, retail traders. How do we stay disciplined here with the credit spreads, with everything we're looking at? And I know that's a question that if we could all answer and master it, we'd be well off with big boats. But how do you stay disciplined in with the people, especially the ones you're interacting with daily, with the spreads that you're putting on? How do you keep everyone at bay?
I you got to do in 2014. The one thing I kept saying is we don't have the chance to stay in a winning trade too long, and vice versa. If you see a trade that's busted, take the loss. It's practice. Practice makes perfect. And if you don't practice taking losses just like you book profits, then you're going to sit in on loss, hoping it's going to turn around and it's going to end up being ugly. I had a NASDAQ credit put spread that would have been blown out. I took the loss immediately as it started coming down. It was a small loss and made it up in other places that I had hedges on. But had I not booked it, had I been when I first started this, umpteen years ago, I would have hoped that the Nasdaq doesn't come down to the price that I was short a spread. Instead, now if my thesis is still correct, however, prices were running against me, and I didn't see any reason for me to. I had no reason for me to stay there. If I had a reason, I would have stayed my course. However, I did see no reason, and if you're hanging out on hope, you need to bail. I was short the markets up until now, and I closed all of my shorts this week for all profits, and I was fighting the tape because I had reason to be there because of what I was seeing in the open interest. There was resistance throughout, and Apple was the only one that went against those resistances. So now I'm out of the shorts. I can redeploy shorts, but after this sharp move, I'm not in a hurry. So I'm very light right now. Small positions, trying to test them and see if they don't work out. I close them and I get out. Don't be too shy about sitting out this volatility, especially that we don't know what's going on. Not even the experts know what's going on. Nobody foresaw low rates. We're at 2% on the 10-year probably today, and nobody foresaw Russia's ruble collapse against the dollar. Dennis can speak to it. He's every time he comes on CNBC, he mentions the fact that there small movements is what you expect in currency, and we're seeing these massive movements in one day that are just mind-boggling. So it's beyond my pay grade, that's for sure.
Nick, we got a question from the chat here on specific stock. Theo's asking how to play Netflix here. We saw it yesterday breaking down to a new low at 326.33. Are you playing Netflix? And if you are, how are you approaching it?
I haven't played Netflix in a while, but it's coming up against the 320. I have a big line drawn there, and it's a long-term area that it comes to. And if I were bullish markets, and if markets are not going to collapse, I may take a stab at it on the long side. Netflix had a pass, kind of like Amazon. The markets gave it a pass. Amazon was on the fact that it's growth, 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 and Netflix was the growth overseas. I don't know if it's as easy overseas as it was easy here. It's a great service, but the line that I have drawn is around 317, 318. I want to see how it handles that area. If you want to catch a falling knife, go ahead. Me, I like to see how it handles the next $3-4. If it's up or down. If it breaks that line, it's not a hard line in the sand, but it's an area from which it broke out, I would say about 13 months ago. Maybe last September of 2013 is where it jumped from that. Between September and October, it jumped from that area higher, and then it bounced against it 1, 2, 3, 4 times, and now it's come back to it. I want to see how it handles that area. It's kind of like a rectangle, not a really hard line, just the area. So the next $3-4 are important in Netflix. I'm not in a rush to catch it. If you are, why not do debit call spreads? It's a finite amount of money. You know how much you're going to lose, and you can participate on the upside. Me, I'd rather miss a few bucks than to jump in too soon.
Nick, can you talk to me? I read a piece from you yesterday. Does Friday's red ending spell options volatility this week? When you're looking at all these moves and everything that's going on, and Dennis was alluding to how much volatility is in this market right now, where does that play into the options? And someone came into the chat talking about looking for the cheap weeklies. Where are the opportunities for finding those cheap options contracts?
I usually look for expensive ones, but the cheap ones, if you're doing debits, this volatility it opens elasticity. So now we were at 1961.5 on the ES this morning. So that just opens elasticity during the day. Hey, we just saw this. We can get there really quickly. And the opposite is correct. We were up in 1994 this morning, just a few minutes before that. So it opens elasticity. So if you want to be a contrarian, why not call spreads? What do you think is going to happen if the Fed don't take out that statement? Whatever the extended period of time that everybody's so focused on. The Fed has been saying the same freaking thing forever, and yet the markets want to interpret it every time differently. They've been saying, people say, oh, they're behind the ball. Yeah, they told you they're behind the ball. They said data dependent. What do you think that means? Data dependent means I'm going to see data, I'm going to react to it. Therefore, that's the definition of being behind the ball. I'm going to see something, I'm going to react to it.
Great point.
They're not going to do anything until they see something. Well, their dual mandate is jobs and inflation. Well, inflation is not a threat. It's less of a threat now than before, and jobs are doing great. Why would they want to fix it? Somebody used an avalanche yesterday on CNBC. I keep coming back to CNBC because that's all I have in front of me here. So if you're talking about avalanches, you don't have one. You have two sides that may collapse, and why would you want to try to fix one, the job side, in order to create something else somewhere else? So just don't mess with it. It's working fine. Rates are low. It's hurting people that are on fixed income, yes, but you don't want to rock the whole economy. Those people on fixed income will get hurt worse. So I don't think they're in a rush to raise rates. I think rates are going to be low unless something major changes in fundamentals. So if they don't take out that statement, I think we will rip into Friday.
All right, Nick, I'm going to ask you for something that you usually probably don't give, but SF Bright asked, hey, Nick, any specific credit put spreads you like right now? Is there anything in your portfolio, in your Create Income with Option Spreads product that you're trading, or anything that you guys are looking to trade on your watch list?
I always have stuff on my watch list. I have a long watch list, and I work it every day, 2-3 times a day. I read through it because that's all I do. I don't want to be exposed to specific names unless I know fundamentals. So there are a few names that held up better than others on this downturn, including some frothy names, which is pretty weird. Like Alibaba held, it came down to the price where it had on the first day it operated, and when it came down close to 99 or 100, they grabbed it with both fists. So Alibaba, a long-term long makes sense to me. So if I wanted to buy something for my son, I'll buy him some calls on Alibaba and forget about them. Leaps out in time. I did that, and I booked some profits in them. I put them to work. I sold some calls against them. I sold some credit put spreads to finance them. So you can do stuff like that. If you want to catch the indices, why don't you go down to the low 1900s and take a stab for this week? The premiums are so elevated, you're going to find premium all the way down to below 1900. I did a couple of spreads below 1900 this week. So, and they pay, 40 cents, but per contract. I mean, it sounds like piddly, but it's like 9-10%
All adds
return on.
up. Yeah.
Yeah, it's like 9% yield on money risked in 4 or 5 days.
You can't beat that.
No, as long as markets don't crash.
As long as you don't have that black swan event, then you kind of don't go for cover, I guess. But that's why you spread yourself out, so you
Right.
know still what your risk is. Like some people
Exactly.
will write that open-ended, and
No.
that can be a disaster because when that black swan event happens, which it inevitably does, and we saw that back in the financial crisis in 2008, all those people who were writing open-ended spreads, or I guess they're not spreads if they're open-ended, but just writing, naked, got murdered.
Well, the thing is, with the writing naked is so attractive, especially if you do have the money to put it to work. But the problem is, people don't realize that when the hits the fan, the margin requirements change without notice, and then you get the call saying, "Oh, you remember you only need 100 grand to cover that trade. Now you need 300 based
Yep.
on this morning's new rules." And guess what? You're gonna have to come up with the 300 to cover that, or buy defense and be forced to trade it against a trade that would have been fine, but the requirements forced you into doing something you don't want to do. So writing naked sounds safe enough. Nothing is ever safe enough. Nothing. So if you take that assumptions and really believe it, then you tend to stay out of trouble.
One more stock before we let you go here, Nick. They were talking about Tesla in the chat, and it is coming up to a big level here at $200. It's trading there almost right now in the pre-market. It's $200.50. Where's the big line in the sand of Tesla? Is 200 a big number from the options perspective?
Tesla is more of a rectangle kind of an area. So yes,
Okay.
the 215, the 200 is critical, and it's shrugged it off a couple of times. One time it dipped below, I think back maybe 6-7 months on an earnings report to the 175s, but it got bought harshly, strongly. Tesla is one of those things where I told you I was selling spreads to buy debit spreads, and I did that. I shorted it, I profited, I reshorted it, I profited, and then I went long it at 200. I had a spread that was 200, 195, so I sold the 200 put, bought the 195, but it was hedged with 2 debit put spreads before that, higher, like at 207 and 210. And as it dropped, I cashed in those profits and I closed the credit spreads for a small loss, but the small loss was smaller than the profits I booked on the other one. So overall, the trade was profitable, and now I'm out. I'm not in a rush to catch that falling knife. I will catch it though because I actually think it's a short long term. It's one of my picks for short. People trade it like it's some technologically innovative company, and batteries have been around here for zillions of years. I don't see the innovation, but I would go along with the fact that people love it and they love Elon. So as long as he's running the company, I will go along it on dips, but I'm not in a rush. Like Netflix, I'll wait for the next $5-6 to see where it's going to go.
All right, Nick. So I got a couple more minutes here till we wrap up. Any other things you're looking at, not only for the end of the week, but for the end of the year as we head into the holidays or anything like that? Any other macro plays you can look at?
I'm going to assume that this malaise in the market is going to pass and try to go long something in January cautiously. Cautiously optimistic, meaning if in my case, I can do credit put spreads, like let's use Tesla for example. If I really wanted to go along Tesla, I can write something in the 170s out to January without including in earnings reports because I don't like the volatility there, and do a credit put spreads in the 170 area. I haven't looked at the premiums, but I bet you there'll be premiums on there to pay 20, 30, 40, 50 cents. And then maybe turn it into an iron condor as markets recover. Then you'll have a hedged trade and double your yield without doubling the dollars at risk. You double the risk of incident, but not the dollars at risk. So something like that. And you can use that with maybe Google. However, careful with Google. People are against it for some reason. Technically, they see debacles in it. Fundamentally, it's a good company. You can do that with Apple. However, Apple doesn't have a lot of support this week. So I'd be very careful with Apple, especially that ran up 30%, whatever, in a month and a half. So go with cautiously optimistic if the fundamentals don't change. You don't have to do anything today or tomorrow. Just sit it out a little bit. Let the Fed announcement come out. Premiums will be wacky, and then you can capitalize on that.
All right, Nic Chahine of Create Income with Option Spreads. Make sure to check out his newsletter and product. Also a chat room in there too. Nic, thanks a lot for joining today.
Thanks, folks.